Anthony, so great to see you. It looks like you're on the go today, doesn't it?
Do people not know that you're not a nice person, or do people know you're not a nice person? I should say.
Listen, I've crafted this persona so people don't see the truth. Find out the truth right now.
I'm Anthony. Welcome to No Vacancy Live. That's my friend Glenn.
You're watching the #1 show in hospitality. Hey, one and all, welcome to No Vacancy Live. Of course, that is Anthony Melcuri. I'm still Glenn Hausman. You've tuned in. So glad you're here today. Anthony, how you doing? Looks like you got some meetings going on in the big city over there.
I'm doing well. I'm right in Times Square. I'm 5 feet from the garage I got to park in.
Yep.
And then I'm about 100 feet from the hotel I got to run into as soon as I'm done with you.
That's pretty cool. So, it's funny. You're in Times Square. Yesterday, we had that great conversation with Dan Lesser of LW Hospitality Advisors. We were all talking about all the kind of cool stuff that was going on in New York City, how busy it was. And one of the properties that came up in conversation was the Marriott Marquis and how that really transformed that whole area. And those things don't happen on their own. They happen because of great developers. And today we're going to rush right into our guest. No chitter chatter because we don't have time for that, because we have got with us Noah Silverman, Global Development Officer for the U.S. and Canada, Marriott International. No, I'm sure that the Marriott Marquis was a little before your time, but what a great property still to this day, particularly after that great renovation that we happened to be talking about on yesterday's show.
It is. It's an incredible hotel with an incredible history, incredible backstory. It does predate me a little bit. I'm coming up on 25 years at Marriott, but it's a little bit before my time in terms of joining the company. But I think the hotel looks as good today as it has in many, many years, and still represents our brand.
Honestly, I think it looks better. I was at the hotel across the street, the Embassy Suites, as the general manager, actually as the director of front office. So I was there literally a couple of years after it opened, and I don't think the Marriott's ever looked better.
Yeah, well, credit to Host, who obviously owns that hotel, for all the money that they've put into it in the last couple of years. Yep. It really is a spectacular property.
Yeah. So, no, it was great working with you on that panel at the Hunter Hotel Investment Conference this year. And I think the best part for us to start is, we like teaching people a lot. What exactly does somebody like you do typically on a day-to-day basis when you're in the office or seeing potential or clients or dealing with issues?
Sure. I mean, I love the fact, one of the things I really love about my job is that there's no super typical day, right? I mean, I find myself today, for example, on the road. I'm sitting in our lovely JW Marriott Hotel down in Savannah, Georgia, heading to a groundbreaking this afternoon for an AC that's going to get built down here in this market by our partners at North Point Hospitality. And so, yesterday I was in a series of meetings back in Bethesda, getting ready to move into our new headquarters building in downtown Bethesda after having been in the office that I've been in since I joined the company 25 years ago, meeting with a variety of folks about projects, talking to people on my team about different development deals. So I love the variety that I get in this job, and the fact that it doesn't really have a typical day.
Anthony? And how do people listen? Everybody knows that in all the brands, everybody the highest standard is at Marriott, and everybody wants to be in Marriott because of the revenue you drive. Mm-hmm. How do you go through when you have all these people wanting to either build a Delta or a Marriott, whatever they want to build? How do you go through the process of identifying the people that get to work with Marriott? Because I know you're very it's challenging sometimes because you have such high standards.
Yeah, it's a good question. I mean, we have the benefit of working with a great series of partners, most of whom have extensive operating, development, ownership, investment experience in the industry before they do their first deal with us. So, we really have the advantage of working with a best-in-class group of owners and franchisees, which makes our jobs a lot easier. And we take a lot of pride in the groups that do those deals with us. I mean, we have this really interesting business model, and as a big franchisor, right, where the success of our business, the success of my team, and our organization is entirely dependent upon having owners and franchisees that want to invest in our brands and are willing to invest in our brands. And we're thrilled to have a great group of brands that continue to attract interest from that investor community. And that makes our jobs a lot easier for sure.
So were you there during the time where Marriott decided to really be asset light and just be kind of a franchisor? Like, were you part of that discussion or team or?
I came right after that. So that really happened in 93. So I joined the company in 97. That really happened in 93. It was a bit of an outcome of the recession of 91 and 92. We were one of the largest construction companies in the world. In the early 90s, caught in a very difficult recession. And I think one of the determinations the company made after that was that we really wanted to focus much more on owning the brands, managing hotels and franchising hotels, and less in owning the real estate. So that split, which created Host at the time, Host Marriott Corporation, now Host Hotels and Resorts, that happened just a few years before I joined the company.
And after that move happened, a lot of the other major companies in the space started to do exactly the same thing. I think it really transformed the hospitality industry and really opened up waves of development that we saw that created essentially the select service business, once everyone realized how cool of an idea Courtyard by Marriott was.
Yeah, I mean, 100%. And, one of the interesting things to me about that asset light model is we've now seen some of the franchisees that grew up with us in that, call it the last 20 plus year period, that were themselves owners and operators of hotels. They themselves have decided to start focusing more on becoming asset light, selling off their real estate portfolios. There was obviously a very highly publicized transaction a few years ago where White Lodging sold most of their hotels to RLJ and embraced more of its own asset light model as an operating company, continuing to focus on some development, some ownership of different kinds of hotels. But even beyond the big brand companies like Marriott, we've seen that asset light model embraced by others in the business.
Well, it seems to make a whole lot of sense. Anthony, I see you got a question.
Yeah, I was just going to say, getting back to the Marriott Marquis, can you explain to me, when I was in Marriott Marquis market for a long time. I ran hotels all around the Marriott Marquis. We took you guys out of the comp set because if we were running 50% and the city was running 50%, you were running 100%. If we were running a $200 average rate, you were running 225. So how'd you do that?
It's the Marriott Marquis is a remarkable business. One of the things I find really incredible about that hotel is even if it were a business all by itself, the revenue of that hotel would make it its own medium-sized business.
Medium-sized, very big business. Hundreds of millions of dollars, right?
It's hundreds of millions of dollars in revenue, right? Of that hotel alone.
It's amazing. I had a hotel, right? Matter of fact, I'm standing outside the hotel I helped develop for a competitor of yours. And we did well, and we did well with the hotel across the street from that. And I did well across the street exactly across the street from the Marriott. And it was always packed. I remember being in the revenue management meeting, and the new revenue manager came in, and you were talking. He's like, well, we've really got to look at the Marriott Marquis. I go, they're sold out. They're like, how do you know? It's not on the list. Because they're always sold out. It really is insane. And if you really think about when they went to look at that property, probably in the late 70s, and they started developing in the early 80s and opened in the mid 80s, I mean, it was beyond a war zone. So the vision it took, it really, without the Marriott Marquis, I don't know if Times Square becomes what it's become.
Yeah, look, nobody deserves more credit for the Marriott Marquis happening than Bill Marriott. He was the person singularly responsible for the vision of having that hotel. And while I wasn't with the company in the mid 80s, I am old enough to remember what Times Square was like in the mid 80s. And it was not a place where you would naturally choose to build a 2,000 room.
Right. And if you want to hear more about the environment that it was, listen to yesterday's show where I explain what it was like a little bit. Listen, that was a great development, but that was a development environment from decades ago. What are you seeing right now here in the United States and Canada as the current development climate?
Yeah, I mean, it's been a really interesting kind of recovery period from COVID, right? I mean, we obviously in many ways fell off a figurative cliff in March of 2020, but the speed of the recovery that we've seen in the business has been matched a bit by the speed of the recovery that we've seen on the development side in terms of our deal flow. I mean, we are now seeing committee volumes. We have a monthly development committee where we approve all new deals coming our way, and we're seeing deal flow that equals and in many months is exceeding what we were seeing in terms of unit count pre-pandemic. Obviously, still some challenges, meaningful challenges with the new construction environment. So we're not seeing quite as many hotels start construction as we would like to. And there's a whole bunch of factors for that have been talked about extensively at the conferences and other places. I'm not sure, Glenn, if you want to get into any of that stuff here, but we're continuing to try to do all that we can to help our investor community get those projects underway. But in terms of interest and commitment in new deals, we've been really, and in all segments and in all markets, we've really been super pleased with the speed of the recovery and where we sit today.
No, one of the things that I've been hearing a lot of chatter about is development, but changing flags on existing properties. How are you seeing right now that may be being the place where the heavy action is as new construction has ebbed a little bit?
Yeah, everything old is new again. And we know that when you hit a recession, I don't want to use the word recession, but when you hit a downturn, as we've hit for the past couple of years that have challenged the new construction environment, we know that conversions are going to become a bigger piece of the puzzle from a growth perspective. And we're a public company. We're obviously expected to continue to grow like most of our brand counterparts. And that creates a lot of competition for an interest, an intense interest on conversion opportunities. So, we're blessed with having a good variety of brands that are really quite susceptible, kind of accommodating for conversions. And we continue to spend a lot of time, my team does, focused on what are those opportunities and where can we find them for our system.
So we got a great question that fits right into this train of thought. How do you guide owners on the right brand for a property? The observation was you're at a Kessler Collection right now, but they wanted the JW brand, not an Autograph for the property. So how do you kind of figure all of that kind of stuff out? Because for people who don't know, you've got like 30 brands. So there's a wide panoply of choices from which to choose.
Yeah, and it really varies from deal to deal. Right. In some cases, it might be quite literally what we have available in the market.
Because I'm standing right here in front of one particular hotel. So you're not going to build another Marriott proper brand there, but you could put JW there. You could put an Autograph Collection there, right?
Yeah, exactly. And the other, it's a collaborative discussion as well, because as I have to remind people all the time, we are not the ones making that investment decision. That's right. So we might only have certain brands available in a market. We might also have a strategic reason to want to add a particular brand in a market. And we might think based on the product or location, design, et cetera, that it fits better for one brand versus another brand. But it has to be a decision that the investor, the owner, makes alongside us. And sometimes they come with their own very strong feelings about what it should be. And at the end of the day, hopefully we can both get to the answer of what's available, what fits, what they want to do, what we want to do.
So depending on the owner's personality, they may be like, I want to do a Le Méridien over an Autograph Collection type of property.
Yeah, and that's actually a really great example, right? So for us, Autograph Collection is a soft brand. Le Méridien is not a soft brand, but it is a lifestyle brand. So sometimes we're having a conversation with an owner where we say, listen, if you need us to provide the brand to you, Le Méridien might be an excellent answer. But if you have a vision for what you want to create at a hotel that's an upper upscale hotel, and you want to do something that's your own vision for that, then Autograph Collection may very well be the better choice for you, because that's going to provide you the flexibility as an owner and a designer and to work with your team to create something unique.
And there's times and brands within your system where you've worked with owners to create a brand that becomes a Marriott brand that
Right.
an owner had a vision for, and then you guys collectively make it a Marriott brand. And there's one brand that comes to mind, but I don't want to mention because I don't know if it's appropriate. But
I believe that relationship ended. If you're
that's
talking about a specific brand.
Well, that's why I said that.
The brand is still with us.
Yes.
The brand is still very much
and a beautiful brand nonetheless.
Right. But my point being is, I've been doing this a while, so I know when to shut up. But that's what's great about Marriott. If you go into a market and there's only one brand that's available within Marriott, that brand's still going to drive you revenue. So if it's not your vision, like, well, that's not really what I was looking for. I was looking for more of a 4-star hotel, or maybe, something, and you wind up with something a little bit more limited service. You're probably going to make your revenue is going to be there because it's Marriott. The Marriott pipes, as they say, or the system really, really drives revenue. I've been on the opposite end of competing against you guys for a long time, and it's really insane of what that pipeline is able to do.
Yeah, and that's where we start a lot of these conversations, Anthony. Right? Is at that big picture level, right? What are really the advantages of being part of the Marriott system, even before you get to your choice of brand? Because that's obviously a big part of what my team and I are selling on a development perspective is those Marriott pipes. Our loyalty program, our Marriott.com website, our distribution channels, all of that, our sales engines, our sales team, all of that is a big part of what we're offering, even before the brand choice is made.
The most important question I have for you: have you spent at least one night in every Marriott brand?
Yeah. I'm sure.
Yes. In fact, I have actually, you know what? I have not stayed in a Bulgari hotel. So Bulgari is a joint venture that we have with the Bulgari jewelry brand. But the hotels are all within our system. And sadly, I have to say that I have not yet spent a night in a Bulgari, but point I'll knock that off. You've
been to Africa and stayed in a Protea hotel?
Oh, you know what? You got another one for me, Glenn. I was focused on the ones. To
be fair, you're U.S. and Canada. I don't mean to,
of the 30, we actually do have 2 that are not offered within my world. One is Protea, the other is Marriott Executive Apartments, and I should confess that yes, I have not stayed in either of those either.
Is there anybody more educated in brands and just the corporate nature of our business than Glenn Hausman?
Yeah, I'm going to suck up a little bit to Glenn here and say that having listened to the show now for a lot of time, I am super, super impressed by the depth of Glenn's knowledge in a lot of different areas within our industry. So
just wait till we start talking about the Fish the musical catalog that they have. Then I will completely wow you. But more importantly, we're here to talk about hotels and stuff like that. So Are you finding more interest in certain brands than others, maybe because of the economic environment or something? How does that typically play out? I don't need an answer specifically today, but I'm just curious how that ebbs and flows as the economy changes throughout time.
Yeah, I think that's a great way to describe it, is it does in fact ebb and flow. I mean, we've seen there are some larger trends that tend to stick with you for longer periods of time. We were talking about soft brands earlier. I think the soft brand trend that started probably, a decade plus ago now, has stuck with us and continues to have, based on consumer preferences and evolving tastes of consumers, has had some long legs and will continue to stick with us for a while. But yeah, I think over time you do see interest in certain segments and certain brands and certain markets change with the times. One of the advantages that we have at Marriott is the breadth of brands that we have, our global scope, et cetera. But yeah.
Interesting.
I think the soft brand. I'm sorry, Glenn. I think the soft brand is one of the best thing ever invented in our industry. It's amazing.
To me, the remarkable thing, Anthony, is that it took us so long to get there. I mean, there was some kind of look, to their credit, Starwood was a little bit in that space, pre-merger with us with Luxury Collection. We obviously took another step forward when we launched Autograph Collection back in 2010. But at that point, we'd been in the hotel business for 55 years. And we'd always said, if you want to be part of our system, we built this incredible, talking about pipes and everything else, we built this incredible network that was useful to be driving customers into hotels. But we said, if you want to take advantage of that network, you have to be under one of our brands. And there are all these tremendous hotels out there that we weren't able to have that, be part of our our family. So it has been a remarkable advancement, and somewhat surprising that it took us as long as it did.
I would have loved to have been in the room when somebody had that moment and that epiphany and said, "Why are we chasing these people away? Bring them in."
Yeah.
Was there like that one moment, that one meeting, that one day, or was it just over a period of time? There was a whiteboard and you guys figured it out.
It was an evolution, and I'm sure it will surprise you.
Yeah.
It won't surprise you that there are multiple people that now want to take credit for that light bulb going off over their head within the organization. Some of them have left the organization, which means that those that were still around at the time get to claim even more sole credit.
I like that
for it than there once was. But
that's a really good career tip. Stick around long enough, and you can take credit for absolutely everything. I remember another company way back in the day that was dipping their foot into this pool. They came to the epiphany because they kept turning away so many room nights. I think it was Chicago or something like that. And there's got to be a better way in order to get more distribution. So that's kind of how they came around to that. They're like, we're missing all of this opportunity over there, which is, I thought, really interesting. Now, yesterday, like I said, we had Dan Lesser on the show of LW Hospitality Advisors. And his big thing was the smart money is on downtown urban core properties. It's kind of how we started talking about the Marriott property. Are you seeing the same sentiment from developers, or perhaps in your community, they're seeing it a little bit different?
Yeah, I think from a new development perspective, we're not quite there yet. I think from an investment and a potential conversion market, we're starting to see some of that, and part of that is it's a little contrarian,
right?
And that's where there's opportunity.
That's what I'm saying. So when you say they're not quite there yet, are they not quite there yet because they can't get the funding, or they haven't realized that maybe there's an opportunity here, or maybe there's just no opportunity that they see?
Yeah, it depends a little bit on the person, their attitude, their vision, and it also depends a bit on the market, right? I mean, take the markets that have really been hit the hardest and are kind of slower to recover and might have been having some challenges from an operating perspective, profit perspective, even before, New York, Chicago, San Francisco, LA, maybe some others. Those are different in terms of urban interest than a Dallas or an Austin or a Miami, right? So, very, very, very different. So it really depends upon kind of what you're looking at and where.
Yeah, that's a good point, because no one realizes, or people that are not in New York City, that these hotels that I'm literally surrounded by right now, we're having a difficult time at the height of the best of our industry. They were having problems paying the mortgage because how expensive it is to run these major hotels in these cities.
Yeah. And New York as well as anybody, Anthony. And I think, one of the dynamics that's starting to play itself out now is there were a number of permanent closures that so while there had been tremendous hotel growth in New York City for a decade, really leading up into the pandemic, I don't know, something 25%-ish of those hotel rooms are gone and are not coming back. They've been converted to other use. And so, I keep aging myself. I'm old enough to remember the days where when you tried to make a hotel reservation in New York, you couldn't because the entire city, was sold out. Losing those rooms is going to generate some interest in that market again. And I think you're going to see those larger, slower to recover markets. I do think we are now, I think Dan is right, that we are now at the time where you're going to start to see more interest in those cities.
I remember the days when we were walking people to Connecticut.
Yeah. Oh my goodness.
Right.
I'm not kidding.
I know.
All the closest areas in Jersey were sold out, and I remember it's like Connecticut. Okay, how do we win that race with the customer? And you don't.
I'm tired of talking about New York. I want to talk about another one of my favorite cities. I remember being in the hospitality business and going, why on earth would Hilton get rid of a property in Las Vegas? I didn't understand it, but now you guys are back in a big way, not only with the Curio collection at the Virgin Hotel, but the incredible Resorts World, not one, not two, but three different
Glenn, you're attaching me to another company.
Noah, he's saying
sorry,
that.
that was
I'm
Hilton.
like,
oh my God, I'm so stupid.
Noah, he's saying that. I'm
I
like,
know.
Glenn, stop.
Dude, you should have hit the cancel button. I don't even know what that was.
Let's talk about the Cosmopolitan.
Let's talk about Cosmopolitan right now. What's it going to be like? What's it going to be like with MGM coming in at the Cosmopolitan?
Yeah, look,
that's one of my favorite properties.
I think we have successfully, at least for now, convinced MGM that the affiliation that the Cosmopolitan has had with Marriott and our Autograph Collection has been mutually beneficial, including to that hotel. We drive a lot of group business and other business into that hotel, and so at least for now, we're thrilled that Cosmopolitan is going to remain part of the Marriott system. Look, we love that market, and we are underrepresented in that market, and so we are trying very actively to do more there. We had a well-publicized project that failed to advance in part because of the.
I remember. I know that. I'm actually surprised that that's gotten off the ground, and I would love for you to have a similar development to that.
Yeah, well, we would as well, and at the risk of stating the obvious, my team, others in the organization spend a lot of time in Las Vegas, trying to do all we can to enhance our presence there. We know that there's demand for that from our customers, a lot of it, and we should have more in Vegas than we do.
Yeah, I'd like to really see that. And if you guys haven't stayed at Cosmopolitan, that is one of the best properties on the entire strip.
100%.
You can try, Glenn, but there's no making up for the year.
No, there isn't. But the fact is, I'm going on vacation next week, so I'm already halfway. You know
what's interesting? No, I don't know how much you follow the show, but that is an Anthony Melchiori mistake. That is not a Glenn Houseman mistake.
I think that's the first time I ever did something like that in 650 something shows.
Honestly, when you first said it, I just thought, okay, he said the wrong name of the company, and then he's going to attach the right hotels, and then I'm just going to say, hey, what you meant to say was Marriott, but then he just went down.
I just went totally down the rabbit hole, but.
It's all good. It's not the first time that somebody has confused one of our brands.
No, I know. All right. So moving on to the next topic, I do want to talk about an issue that I know is very important. And at the NYU Hospitality Investment Conference, which took place at a Marriott in New York City, you announced Marriott's Bridging the Gap, your new diverse owner incentive program that you're investing an initial $50 million to help make this happen. For those who haven't been following the story, can you please share a little bit about that? Explain what it is specifically.
Yeah, sure. Look, I mean, our company has a long history with a focus on DE&I issues, probably back before DE&I was even an acronym that people would use. And we've been focused on enhancing diversity within our ownership ranks for many, many years. But we've also recognized that despite having been at that for many years, there continues to be underrepresentation among our owners and franchisees with certain groups that we would like to help facilitate more of a path toward ownership with. And I'm speaking specifically of Black owners, Latino owners, women owners, and Native American First Nation owners. Those groups continue to represent or continue to be meaningfully underrepresented among our ownership groups. So while we have had a number of things that we've tried to do over time to enhance representation of those groups in our ownership ranks, we've never really had a formal program of incentives to try to address that. And so what Bridging the Gap is, Marriott's Bridging the Gap for us is our formal effort to do that. And we announced this initial seed funding of $50 million. As I've said many times now, we'd be thrilled to have it be a multiple of that, because what it means is that we're even more successful in bringing underrepresented groups into our ownership ranks than we've been targeting. But that initial seed funding of $50 million will help go toward financial incentives to underrepresented groups to help facilitate projects getting done. It's a bucket of incentives really that we're giving, from additional, from lower fees to lower application fees, free training, free or deeply discounted training, and key money. And what we hope is that the combination of relationships that we have and the economic incentives that we're providing will allow us to be much more successful with those underrepresented ownership groups than we have been in the past.
And those relationships with banks and getting key money and getting the training, that will get it off the ground, because where people mostly stumble is getting the financing, getting the banking. And if you
Right.
don't have experience, having the Marriott name behind you and in front of you is everything.
Yeah,
So
we know from other deals. I'm sorry, Glenn. We know from other deals that where we step up and say we are committed and we're putting our money where our mouth is on this commitment, that's meaningful to banks that are providing that financing. And make no mistake, I mean, we need the banks to come along with us in this initiative and join us and start to think differently about how they finance folks with less experience, maybe than some others in the ownership ranks. But we intend to do everything that we can with those relationships as well to help these projects get done.
So now how can we all work together to help turn that aspirational thought into a transactional one where these people are actually getting into properties as opposed to just hoping and thinking that they can do it?
Yeah, well, I think some of it is what we're doing right now, which is getting the word out. I mean, part of our launch at NYU was just the first of what we hope is a regular cadence of conversations that we have around this program, around our efforts to expand representation within our ownership ranks. And then I think it's continuing for us and others to work the phones with our contacts and our network. I mean, one of the amazing things about this industry is that is the network of people that are involved in it and the willingness of folks, the different skill sets, the different capabilities that are out there, and the willingness of folks to help one another and partner with one another and work together to make projects advance and to facilitate the entry of others into our business. I know plenty of people that in a lot of other industries would think of themselves as competitors with one another, who are nonetheless very good friends with one another in the hospitality business.
Oh, yeah.
I love.
Well, yeah, and a lot of us just transferred different companies. And,
Right.
I mean,
so it's working together as an industry with our network, with our peers, with all the folks that we've come to know and work with over many, many years to help achieve this objective.
And most people have been able to achieve more because of their friends and the connections and the colleagues that they have around them. Noah, I'd like to see more of a formalized program from companies such as yours and stuff like that reaches out to those people at the property level, right? Because Anthony and I talk a lot about the disparity between the representation at the property level versus the executive boardrooms and ownership. How can we actually bridge the gap instead of continuing to talk about bridging that gap?
Yeah, it's a great point, a great question. So while I have some responsible for our company's DEI initiatives as it relates to our owner and franchise community, we have a board level committee called our Inclusion and Social Impact Committee that is focused on diversity, equity, inclusion initiatives across the entirety of our across the entirety of our relationships. So our associate population, our vendor relationships, and what you're really talking about, Glenn, are those associates, our hotel-based associates, and how do we advance more people so that there's more inclusion in that space? And it's a whole separate track with a lot of formality around it as well. We have development programs, opportunities to bring people together, to network more, and to give people more of an opportunity in that arena as well to continue to advance their careers in whichever direction they may want to advance them, including the potential for them to seek out their own, their own ownership or investment companies, if that's in fact what they hope to do at some point.
I think that's great, because I think about all those 20-somethings that say one day I want to own a property, or one day I want to be an executive at a property, and I think we've got a lot of great opportunity to make that happen.
Yeah, so I'll tell you a quick little story. I know you all are familiar with Tracy Prigmore's She Has a Deal
of course.
Pitch competition, which Marriott's been a proud founding sponsor of for from the beginning. The winner of that competition this year was a Marriott associate. She works in our revenue management organization. She has always had a dream of owning hotels. She entered the hotel business in part because she has a dream of owning hotels. She entered that pitch competition in part because of that. She won successfully, and now she's doing what she can to pursue that dream. And I would not bet against her if I
definitely wouldn't. And another one not to bet against, who will be here on Monday, is our friend Devon Reeves, who's got some big news I don't know it exactly, but I think it's going to be around this sort of stuff about helping people get a quicker path to ownership. So
yeah, I've seen some of Devon's announcements, and I'm waiting anxiously to see what it is that she's going to announce.
Watch No Vacancy Live noon on Monday.
I will.
We'll be featuring her. We've been trying to get this going for months, so she's finally ready to talk about it.
Excellent.
So, how are you feeling about the next year or so when it comes to development overall? You feeling good? You feeling a little bit anxious? You just feeling like maybe you have to focus a little bit harder? What's your general vibe right now?
Yeah, look, I mean, overall I feel good, right? I mean, there's certainly some clouds if you choose to focus on them on the horizon, but we see, you know, kind of week after week of data in the hotels and in what we're doing that tells us that we are in a good place. So I am choosing to focus on the good place right now and hope that carries us through. I mean, yes, there's plenty of things we could talk about that are creating those challenges, but so much good news that I think that's the right thing to focus on.
Yeah, I see in the next 18 months, occupancies are going to not take as big a hit as average rate. I think people are still going to want to travel. People are still going to do business, but I think it's going to be a challenge with maintaining the rate that we've seen in the last year or so. And, you know, we'll see. It like you said, it depends how dark those clouds get. But if New York's any indication of people wanting to come to New York, I mean, Broadway plays are sold out. So New York is starting to make a comeback slowly, but it's getting there. Matter of fact,
a lot of those gateway cities that started to make that comeback before international travel returned to normal levels. I mean, it's only been how long has it been now? 30 days or so since since the testing, the re-entry testing requirement was lifted.
Right.
So,
but as I'm talking to you, I'm watching people come back, come in and out of Times Square, and they all look like leisure travelers to me.
Yep.
Yeah, particularly Noah. I don't know if you had trouble getting in and out of the Marriott Marquis during NYU because it was so packed in a way I haven't seen it in years. It was magical. You know?
Yeah, it was really, really great to see.
All right, I got one more question for you, and then Anthony, we'll see if you have any questions. What I'm curious about is what advice do you have for somebody that wants to begin a career or has just started a career in hotel franchise sales? What's that experience like? How can we be successful if we want to take on that challenge?
Oh, it's a great question. I mean, I've had a bunch of different jobs in my time at Marriott, and none that I've enjoyed as much as doing the development role. It just connects you to the industry so well. My advice to people that are interested on the franchise sales side or the transactional side of the hotel business generally is just learn as much as you can about the business overall. Spend as much time as you can learning our contracts and the way that the business kind of runs, and understand what's involved in doing it successfully, which is committing to it from a relationship perspective, a travel perspective, getting out, spending time, being in the markets, understanding how to learn different markets, and really deeply connecting with the people that, again, are our customers, who are the owners and franchisees and investors that want to do hotels with us, because we are a people business at the end of the day. We're a relationship driven business. Again, one of the things that I really love about what we do, and if that's what you like and you're willing to invest in those relationships and take the time, I think you can be really, really successful doing this kind of stuff in the business.
Yeah, and what's great, if somebody comes into franchise sales or really any part of Marriott, you already have the template. You already have the successful form to go in and just represent Marriott. And if you're good and you're curious and you're passionate, I would imagine it's almost impossible to fail. It's when you're working for I'm not saying a hotel brand, but any company or brand that just doesn't have the same reputation as a Marriott, it's more difficult. If you take your curiosity, you bring your curiosity and your passion to Marriott with your reputation, I don't know how you would fail.
Yeah, I mean, there's no question that we are fortunate to have the brands to sell and the system to sell that we get to sell, right? I mean, it is an advantage that I think many of us that have been doing this for a long time are deeply appreciative of. I say this to our brand people and our consumer operations people and our design people, the folks that really help build the cars that then we go, kind of take onto the lot and get to move. A lot of what makes our jobs so rewarding, but also probably in some ways a little easier than some other places, is that we have a terrific system and a terrific group of brands that we know can be successful to sell.
Beautiful. Noah, if people do want to invest with you at Marriott, how can we learn more and find you?
MarriottDevelopment.com is the best place to connect with us and our team. So would encourage everyone to go there, check it out, and let us know how we can help on your next project.
Great. And I want to thank you for being here and witnessing the biggest gaffe I've had in at least 10 years. So thank you.
All good. Thank you so much for having me, Glenn. It was great to be with you both.
You rock, Noah. Be good. See you soon. See you on the road.
All right. Take care, Jim.
Thanks, Noah.
Be well.
That was great. So that was fun. He's, I love talking to him. And that's an interesting, that people, have that ability to get involved in a company like that and work their way all the way up to global development officer for the United States and Canada. So cool.
You didn't ask. You said Anthony was going to ask the last question, and you didn't ask me to ask the question.
I'm sorry. I know you've got a hard out, and we're running out of time. I apologize.
I have a very important question. Maybe you can answer it.
All right, maybe.
How does Glenn make a mistake like that? No, I'm just kidding.
Yeah, no.
I'll tell you why. It made you human. It
has been 35 months since I had a vacation. 35 months.
Glenn, every time you say that, I care less because it's been longer than that for me.
Yeah. Well, I did.
I'm very jealous of your Hawaii trip, my friend. Yeah, so you were in Hawaii when you were saying that. It's funny because you said the word, the other brand, and I was just like, all right, he just made a mistake with the name, and then he's going to come right back to it.
I doubled down.
And then when you went to the other 3 hotels, I was just like,
I don't know what the hell's wrong.
I was questioning myself. I was like,
I was questioning me after that. I don't even know. Yeah, well, the good news is I'm going on vacation, and if I survive things like zip lining and peering into a volcano, I'll be back. We will have a new show on Monday, though. Like I said, with Devon Reeves, really looking forward to that. She's got a big announcement to make, and it has to do with how probably I think you folks out there can get into hotel investment easier. I don't know the details, but my suspicion is that. Tune in for that. Of course, Friday night audit.
Well, she told me she told me all the details, but I'm not allowed to tell you.
All right. Yeah, well, I might know a little more than I'm letting on to, but I don't know about that either. All right, everybody.
I don't know anything.
All right, let's get out of here. Remember, download our show, listen on Apple Podcasts if you're listening, watch us in all of those channels. He's at Anthony Hotels. I'm at Traveling Glenn. Remember, you've got one life, so blaze on. And Anthony, say your line.
I'm seeing if my garage was open.
Beautiful way to end the show.
Be kind to yourself.
All right, we'll see you guys on Monday. And then we'll have some new shows that we're doing live